Look, if you run trucks for a living, I don't have to tell you that 2026 is not the freight market we had a few years ago. Rates got squeezed, your costs went straight up, and a whole lot of carriers parked their trucks for good. And here's the kicker. Right when the money got tight, the lenders got picky. I see it every single week. So let me answer the question you actually came here for. How do trucking companies really get funded in a market like this? Owner-operators and fleets both, without stepping in one of the traps that are absolutely everywhere in the business financing space. I fund these deals. I know which tools work and which ones will sink you. And I'm gonna lay the whole thing out for you right here, right now. I'm Siegel, founder of Small Biz Heroes. I've helped business owners secure well over $80 million in funding, and I'm telling you, trucking is one of the most unique industries I work in because the funding playbook for a trucking company looks almost nothing like the playbook for a restaurant or a med spa. I mean, think about what you're dealing with. You've got expensive equipment. You've got customers who pay you bi-weekly, net 30, net 60, and sometimes even 90 days late. And you've got fuel, repairs, and insurance expenses that do not wait for anybody. That combination means you need a very specific set of tools. Use the right ones, your trucks keep rolling, and your cash flow keeps flowing. Use the wrong ones, and those daily payments will choke the life out of you if you take too many of them without some sort of exit plan. So let me walk you through the 4 tools that actually matter for trucking, logistics, and transportation, when each one makes sense, and how to qualify in a tighter market. Here's the honest state of trucking funding in 2026. Before I hand you the tools, I need to be completely transparent with you guys as always, because I'm not gonna sit here and pretend it's 2021. The freight market went through a long, brutal stretch. Rates compressed, carriers went under, and let's be real, the lenders watched the whole thing happen. So today they look at trucking with more caution than they used to. They tightened up, insurance costs climbed, and brand new authorities, guys who just got their MC number a few months ago, those are the toughest deals right now because a new authority in a soft market is exactly what a lender's scared of. But here's the other side of it, and this is the part I need you to hear. Funding is absolutely still happening in trucking. The carriers getting funded are the ones who understand what the lender's nervous about and walk in ready to answer it. And honestly, the tighter the market, the more the prepared operator wins because there's less competition for the money. Let's start with the big one for trucking, equipment financing. This is how you fund the truck or the trailer itself. Here's why it's the friendliest tool in this whole industry. The equipment is the collateral. The truck secures the loan. That lowers the lender's risk, and that usually means you can get approved with a less than perfect profile and put less down than you'd think. Terms generally line up with the useful life of the truck. But in this market, a couple things matter more than they used to. Age and mileage is huge. Lenders get cautious financing older, higher mileage trucks because if they ever have to take one back, they want something that still holds some sort of value. A cleaner, newer, used truck gets you dramatically better terms than a beat up one with 1 million miles on it. Your personal credit still matters here too, especially as an owner-operator, because lenders are looking for comparable credit history, whether that be previous equipment loans or installment loans. And you gotta remember, you are still the one signing for it. And how long you've held your authority matters as well here. Now here's a piece that most people miss, and it's money in your pocket. When you do finance equipment, you can often use something called Section 179 to write off a big chunk of that truck or trailer in the year that you buy it and depreciate that asset, instead of spreading it out over years as you pay back the financing. That is a real tax advantage. But here's the part that's even more useful for truckers to understand. That same depreciation works in your favor when you go to borrow. When a good lender analyzes your business, they take the depreciation you wrote off on that truck and they add it right back to your bottom line because they know it's a paper expense, not cash that actually left your account. So the write-off lowers your tax bill and the lender still sees the true earning power of your business underneath it. You get benefits from both sides. That's why knowing how this works and having someone in your corner who does can be the difference between a no and a yes. Here is my advice. Finance a truck that's actually gonna keep producing revenue, not just the cheapest one on the lot. A cheap truck that lives in the shop isn't a deal. It's a payment with no income behind it. I've watched that mistake happen too many times. Now let's move on to tool number 2. Freight factoring. Now, here's a tool that almost is unique to trucking to an extent, and it solves your single biggest cash flow problem. You haul a load, you deliver it, you've earned the money, but the broker or the shipper might not pay you for 30, 60, even 90 days. Meanwhile, fuel is due, payroll is due to your drivers, repairs are due, or maintenance is necessary for some of your units in your fleet right now. That stuff is due. Those bills need to get paid. And that gap right there is what kills trucking companies. It's not a lack of revenue usually, it's a lack of revenue timing. Factoring fixes that timing. You sell your unpaid freight invoices to a factoring company, and instead of waiting 2 months, you got most of that cash in a day or two. Most factoring companies go up to 90% of your invoice within 24 hours. They charge a small fee per invoice and they wait on your customer for you. A lot of them also throw in same-day fuel advances and fuel cards and other benefits, especially on loads you've picked up but haven't delivered yet. But listen to me on this, because this is where carriers get burned all the time. Not all factoring is the same. I want you to watch 2 things here if you're shopping factoring lenders. Number 1, recourse versus non-recourse. With recourse, if your customer never pays, you're on the hook to buy that invoice back. Non-recourse pushes more of that risk onto the factoring company, but it usually costs you a little bit more. Know which one you're signing. Number 2, make sure to look out for those long-term contracts with high monthly minimums and ugly termination penalties that lock you in for years. Most good factoring companies do have a contract minimum, but it's 12 months. And a lot of the ones that we have don't have any minimums, and they are month to month, not locking you into anything. The factoring itself is a great tool. It's the predatory contracts wrapped around it that's the trap, and that give factoring a bad name. Read the agreements or have somebody who knows what they're looking at read it for you, like someone on our team over at Small Biz Heroes, before you sign a single paper. Tool number 3 is working capital, and that could be provided through a variety of different programs. And for trucking, the best version of this is a unsecured business line of credit. Think about what actually drains a trucking business between settlements here. A blown engine, a surprise insurance premium, and I know that if you're in the transportation industry, you feel me when I say a surprise insurance premium. A fuel spike, a slow 2 weeks. A line of credit is built exactly for those purposes. You get approved for a limit. You draw only what you need. You pay interest only on what you use. And as you pay it back, that credit opens right back up. It's a shock absorber for an industry that's full of shocks. This is also where business credit cards and fuel cards earn their spot. Fuel discounts that add up fast across thousands of miles. And they help build your business credit profile when you run them right. Here's the honest qualifier though, and I'm gonna slow my roll for a second. Revolving credit like this rewards the operator who's already got his house somewhat in order, with consistent deposits, clean bank statements, decent credit. If you're not there yet, that's not a no. That's a not yet for the best kind of financing. And it also just tells you what to build toward. And that's exactly what the back half of this video is about. The fourth tool is SBA financing. And for trucking, this isn't your everyday tool. It's your big move tool. And there are lots of banks that are SBA approved lenders that don't approve the trucking industry, but we have plenty that do at Small Biz Heroes. So when does SBA make sense for a carrier? When you're buying the yard or the terminal you've been running out of instead of renting it. When you're making a major fleet expansion, when you're consolidating a bunch of equipment loans into a longer term, or when you're buying another trucking company, taking over a retiring owner who's already got trucks, contracts, and customers in place. For moves like that, SBA gives you longer terms and a lower down payment than just about anything else out there, which keeps that monthly payment manageable while the asset goes to work for you. Let me give you a real one we're working on right now. We got a trucking company through a Facebook group that we're vendors in, doing a roughly $4 million land acquisition. Here's what makes it smart. They're going to use 51% of that land to build a parking lot for their own trucks. And then on the other 49%, they're gonna rent that out to other trucking companies. So the property pays them two ways. It solves their own parking and it throws off rental income from their P&L. And because they're occupying more than half of it themselves, it fits inside what SBA real estate financing is built for. What it's not good for is fast cash or covering a slow week. The SBA takes longer and the paperwork's a lot heavier. So think about it this way. Equipment financing and factoring keep your trucks rolling day to day. And SBA is how you make the big leap when you're ready for it. Now, here's how to position yourself to qualify. So in a tighter market, how do you become the carrier that actually gets the yes? I'll walk you through it. Separate your business and personal finances completely and run everything through a business checking account. Lenders read your bank statements closely. The more money you keep in the account, the more they think you'll be able to afford and the better your terms will be. They want steady deposits, healthy balances, and to see you're not scraping zero every single month. Protect your personal credit as well, because as an owner-operator, you're still backing this thing personally, especially in the beginning as you're still building out your credit profile on the business side. Then, keep your authority active and your safety record clean. Compliance is important. Your CSA scores and your time in business tell a lender whether you're a survivor or a risk. And last but not least, keep your equipment in shape, because that truck on your balance sheet isn't just how you earn. A lot of the time it's the collateral that the whole deal sits on. Even in a cautious market, you look like exactly what a lender wants. An operator who's gonna keep running and keep paying on the money that was lent to them. So here's the bottom line. Trucking funding is its own world. There's equipment financing for the truck itself, factoring for the cash flow gaps, a line of credit or working capital loan for the curveballs, and SBA for the big strategic moves. The carriers who win in 2026 are the ones who use the right tool for the right job and don't get trapped in a bad contract on the way. And honestly, that's where we come in. At Small Biz Heroes, we know this industry and we move fast. Before you sign anything, let us look at your situation. I promise that you'll be able to tell a difference if you've ever spoken with a lending company before. We can and will tell you straight which of the more than 20 funding programs we work with actually fit where you're at right now. And if you're a brand new authority, we still have programs for you. But if we figure out that the real answer is let's build your profile for 90 days first, we'll be the first ones to tell you that too. I'm not gonna shove you into a daily payment trap just to close a deal. That's not how we do business, and it never will be. Give us a call at our toll-free number today, 888-859-8408, or click the link below to figure out what next steps are for you and your trucking business. And if you've got money tied up in slow paying invoices, or you need working capital right now, and you simply don't qualify for one of the other programs that I mentioned in this video for one reason or another, go watch my video on merchant cash advances next. It's in the description below. In that video, I break down exactly how they work so you can use one the right way if you ever need it. And MCA isn't the enemy. It gets a bad rep because a lot of the brokers that sell them are bad people. But sometimes it's the only tool that fits, and that's okay. The goal is just to go in with your eyes open. Subscribe to the channel so you don't miss the next one in this series. And as always, I'm rooting for you. I'll see you in the next one.